Today's guest is Haseeb Qureshi, the managing partner at Dragonfly. Dragonfly is one of the largest crypto investment funds in the space and has been investing in it since 2018. It has launched over 4 funds for a total of about $3 to $4 billion. With that said, it's invested in over 150 crypto projects and teams across DeFi, CeFi, NFTs, L1s, and L2 blockchains. And Haseeb is also the host of his own podcast called The Chopping Block. So I'm sure this is just second nature to him to come on. Haseeb, welcome to the show.
Thanks for having me. It is actually, I'm legally obligated to do my own podcast because I'm a crypto investor.
Well, I actually do enjoy it. So it's great. And, Tom's great as well, and the other host. But to start off, we like to ask our guests something that maybe isn't, the topic of the chopping block. What does crypto in America mean to you?
It's crypto in America. I mean, it's been such a sea change over the last year. Like I've been in the space for a long time. I've been in the space since 2018. So I have gone in and out of various phases of being the coolest person that gets invited to every party to just being like, literally my friends won't DM me anymore and they're kind of embarrassed to know me. Like as a crypto investor in America, you just, like the highs and lows, I will say, over the years of your career doing this, is unlike anything I've ever seen. Thankfully, I am very okay with not having any friends. So I'm able to bear a lot of those. But so many people I know who came in, like the same cohort that I did in 2017, 2018, so many of those people were just like, screw this. I'm not down for this. Like I have good career prospects. I don't have to do this. I guess for me, I had so few options that this was, I'm just stuck here.
I was going to ask why you stayed, but that's not why. You have more than a few options.
No, I think the honest answer is that I'm just really stubborn. Is like from my perspective, here's the thing. I'm not a cypherpunk. I don't pretend to be. I'm not a privacy maximalist. I'm not any of these things. I'm not somebody who's like, oh, the state should be destroyed and all this stuff. I'm just somebody who's like, I'm pretty sure I'm right about this. I'm pretty sure that crypto is going to happen and you guys are wrong and you guys are over indexing and screw you. I'm going to prove you wrong and I'm going to do it with my own, I'm going to do it with a checkbook is proof to you guys that you're wrong. And,
what got you into crypto, Haseeb? You said 2018. What was the spark behind that?
Well, so I bought my first Bitcoin in 2016, which was basically when Trump got elected the first time. Because I was like, okay. I mean, at that time I wasn't very invested in politics back in 2016, but I just had this idea that Trump is going to start World War III. And it's like, okay, what do you buy? How do you invest in that? And like, what's your hedge against that? And I thought, I should buy Bitcoin. And so I didn't have a very robust understanding of what I was doing. I didn't have like a big thesis about digital gold or something. And so it was really with the advent of Ethereum and with ICOs, I was working at Airbnb at the time. I was a, software engineer. And that was when it really clicked for me that there was something much bigger going on in the space. Beyond just, okay, there's this like thing you can buy in order to buy drugs online. That was my perception at the time of Bitcoin. And then it's like, some kind of post-apocalyptic currency maybe. But the idea that this was going to completely change the way that money works, that this is going to change the way that financial assets work, that it's going to be open source and programmable and real time and 24/7 and accessible from everywhere in the world by anybody with a mobile phone. That idea, just seemed like obviously this is going to happen. There's no way, given the features of this technology of making it permissionless, decentralized, censorship resistant, this will definitely happen. And it's futuristic and it's weird. I mean, now it seems kind of pedestrian. Everybody's like, oh, of course, crypto. But in 2018, it was like actually really weird, right? Like you'd read articles about crypto and people were talking about it like, the way that people used to talk about like cryogenics or like, the brain emulation or these kind of like, oh yeah, wouldn't that be so weird if that happened? Well, it's like people were writing sci-fi exposés basically when they were talking about crypto. And, I really was convinced that, I remember 2018, it was after the ICO bubble had collapsed and, we had some juniors on the team who were just very despondent. They were pretty much convinced that they had made a career mistake, that, crypto was over and they should just go back to their tech jobs or their finance jobs or whatever. And I remember like, telling them, look, I don't know about any of this other stuff. I don't know about ICOs. I don't know about, status or any of these crazy tokens. I don't know if they're going to be around. But here's one thing I do know, beyond a shadow of a doubt, is this idea that you can take dollars permissionlessly accessible from anywhere in the world with just a mobile phone, that is going to take off like hotcakes. There's no fucking way that it doesn't. I don't know if I'm allowed to curse, but sorry.
You curse all you like.
Okay. Thank you. That is something of which I have zero doubt. I don't know how long it's going to take. It might take way longer than any of you have the capacity for pain, but I know that it's going to happen. At that time, stablecoins had $1 billion circulating supply. They were not growing. And there was just this, to me, there was an inevitability that all this was going to happen. And this is before CBDCs, before the Libra, before all this stuff now that to us has legitimated this concept. And back then, you couldn't have imagined the Treasury Secretary going in front of Congress and being like, oh yeah, obviously stablecoins are going to, completely cannibalize M2. But that's basically what Besson just said last week. So, we're in a new world now. But for me, yeah, that insistence that no, you guys don't get it. I'm totally right. And I'm going to prove it to you. That for me has been a lot of my motivation.
I'm really curious how you see that thesis playing out against, you just mentioned a lot of the history of sort of the investment structures that we've been putting capital into as an industry, right? So ICOs, obviously small teams raising in kind of a permissionless way, that gets shut down, with the kind of the death of ICOs under the last administration. And then now we have this sort of labs co and foundation model, and we're distributing governance to this other structure. Do you think the model that we have for investing in crypto right now will facilitate this kind of open permissionless universe you're talking about? Or do you think that we actually need to look at new methods of capital formation in the US? Does that ever sort of cross your mind? Is it working now, or how do we get to that kind of utopian sort of future state you're talking about?
Yeah, well, first of all, I would not describe it as utopian. Right. I've never been utopian about crypto. I'm actually, even from the very beginning, when I told people that I'm doing this full time, I told all my friends that I don't actually know that crypto is going to be good for the world. I know that it's inevitable. I know that it will definitely happen, in the same way that I don't know that social media was good for the world, but I think it was inevitable that it's going to happen and that it's going to change the way that we communicate. So I'm not Pollyannish about technology by any means. But that being said, do I think capital formation is going to change? I mean, it's already changed a lot. That being said, there's a kind of retro moment happening right now with the Trump administration, in the sense that crime is legal. Everything's okay now. You can kind of just go for it.
SPACs are back.
SPACs are back. We've got all these treasury companies. And then all of that stuff is, again, kind of a callback to the way things were in the past, is that at the end of the day, capital markets want to be open. And if you try to force them shut, people will find other weird ways to let their, let that animal spirit energy come back out and do what it's going to do. So that all being said, I think basically capital markets work. They work. Some functions work better than others. And there are obviously times when you get these aberrations or these bubbles. And, I think these treasury vehicles are a good example of that, where you clearly have this mania going on right now. There's lots and lots of money pouring into these things. But what are these treasury vehicles doing? The answer is that they're buying crypto assets that they think will go up. And yeah, okay, they're trading at a premium to NAV, and people think that it's a magical money-making machine, is you take a thing public and you just make a bunch of money magically. That will eventually end, obviously has to, otherwise all of the world's financial assets will end up in treasury companies. So at some point it has to normalize. But this whole, at the end of the day, it's all kind of just perturbations over this underlying story, which is that, people are trying to find where the future is going. And people realize increasingly that, yeah, it's one of the big parts of that future is crypto and crypto assets, Bitcoin, Ethereum, all these alts that are now coming into their own their ways with treasury companies. So I'm actually pretty optimistic, is that, people really get upset about the ways in which capital formation evolves. So there are people really mad at ICOs, and there's people really mad at IDOs, and there are people really mad at, this thing and that thing. And I'm like, look, it's all fine. At the end of the day, capital will find good opportunities.
Yeah. Do you think the current pro-crypto regulatory climate is kind of the opportunity for this American dynamism theme and crypto to make a joint comeback and homecoming stateside? Or do you feel like we still have a lot of work to be done and like the optimism is just riding the hype of, the recent election and the pro-crypto sentiment out there in the US? How do you think about that?
Yeah, so I think it's great. That being said, I think it's also less of a big deal than maybe most people are positioning it to be. The reality is that before the election, most of crypto was happening in New York already. So why was that? I mean, that's the real question, right? They weren't quote unquote based in New York. Yeah. But why was it happening here, even though this was the most combative administration that we have seen outside of, basically China? China is the only one that it's probably more dangerous to build a crypto company there than it is here. Why was that happening? I mean, that's actually kind of a deep question, is why were there so many founders here before the election? Given the fact that they were getting sued into the ground by the SEC and, basically the world's most powerful government. And the answer, I think, is that founders in general tend to be irrationally optimistic, right? You kind of have to be in order to start a company in the first place, because it's the kind of thing. Yeah. It's the kind of thing that everything in the world is conspiring to tell you, don't do that. Go get a stable job, go do something normal, and go get 2 kids and a house and all this stuff. And, founders are just a little bit crazy. They're kind of wired weird. And so, a lot of founders just irrationally believed that, okay, yeah, they're going after these people and those people, but when I get in front of Gary Gensler, he's going to get it. He's going to get that, I truly have just love for the game. I actually want to make the world better. And my thing is, driven from the pureness of my heart. And a lot of founders, I would ask them, why are you in Brooklyn? What are you doing? The SEC is just down the street. And their answer was it was just genuinely no, I think we're doing the right thing. And, that to me is a part of the reason why, one, America has been, even during the sort of, post FTX dark ages of crypto, that is why America has been such an important wellspring of innovation in the crypto industry, regardless of who's president, regardless of whether Trump comes in and says, hey, all this stuff is legal now, please come back, is just because America is the place of that irrational optimism. It's always been. So there are times when that wanes, and there's times when, hey, America is getting cynical, and I think that's bad. And I think that is also the dark side of this America First movement, is there is some cynicism that you see now being entrenched in America about our ability to be world leaders and to kind of, set the agenda for the world. I think that's always been our mantle with respect to technology and innovation. And losing that, I think, is very dangerous. But the idea that okay, all these founders are coming back, they'd never left, I come here to New York, I'm in New York right now, and yeah, everybody already had an office here, so it's not like I see all these people coming back. I see all these people announcing publicly that they're here, but they were mostly here to begin with.
Maybe it was the public part. Yeah.
Yeah, exactly.
I'm curious. So on the New York side of things, so say open an office in New York, actually also, and would love to have you by there. You got to check it out next time you're in New York, but
absolutely.
The builder community in crypto does seem to have concentrated in New York, as opposed to, you came out of traditional tech in the Bay Area. There's a lot of states trying to do interesting things to attract crypto builders, right? You have everything Wyoming is doing. You have Texas doing this new corporation thing with, Elon's help. Why do you think crypto, is it just a financial industry focus there? Why do you think crypto is not as concentrated in traditional areas like the Bay, and is more New York, or is also not necessarily moving to these kind of states that are trying to attract the industry?
Well, okay. States trying to attract the industry, that's never really worked anywhere ever. So, there's been so many places that have said, oh, we're the new Silicon Valley. Come to Utah, come to Miami, come to, Tennessee. And, obviously it's very earnest, and I applaud anybody who's trying to encourage innovation. But the reality is, we call them network effects for a reason, is that they're really, really hard to break. And the network effect that Silicon Valley has had historically on technology has just been basically insuperable. Even when Silicon Valley was collapsing, post-COVID, the city was horribly mismanaged. They had these crazy fires. California was just kind of a hellscape for a good couple of years. And nevertheless, that's where all the AI activity is happening. All these tech companies are still there. Now, crypto is an exception, right? Crypto did leave the Bay Area. And we used to be completely out of the Bay Area, in terms of our US presence before COVID. So we had an office there. I was based there. But after COVID, everything scrambled. Now, why did this happen? I think it was in many ways, unique to crypto, because crypto is already so global, and everybody in crypto is kind of a little bit of a vagabond. So there was this sense from people in crypto of like, oh, great. Like SF is cooked. We don't have to be here. So let's go to Mexico and Singapore and Miami and Puerto Rico and New York and this place and that place. And then once things started opening back up, so I think that was the moment that the SF network effect was broken for companies that like crypto that were mostly startup driven, because almost everything in crypto is a startup, right? And once that broke, the question is, okay, once everybody reconvenes, are they going to reconvene back in SF? And for crypto, the answer was definitely no. And now why was it definitely no? I think it was a few reasons. One was the rise of NFTs. NFTs were, if you remember, like when everything was opened back up in 2022, NFTs were this cultural moment. It was consuming almost everybody's mental energy. And NFTs were mostly about culture. It was less about technology than it was about culture. And New York is where culture happens. It's not SF. Right? SF is where tech happens. And so much more of the story was about culture than it was about tech. And that was driving a lot of the energy toward New York, and actually to LA as well. But New York was a more significant beneficiary. The second thing was that because all these people had already left, New York opened up sooner than SF did. So SF was still locked down. And so people started, I remember in 2022, people started going to New York and saying like, hey, New York's open. There's stuff to do here. You can go out. You can go to restaurants. You can party. And everybody there was so much pent up energy that things just recongregated in New York. And I think the last thing that people realized when they actually got to New York and more people started moving there was that New York has a social scene. And, there are all these people who made a bunch of money in the 2021, 2022 era. And SF, like there's not a lot of ways to spend money. Like, I love SF. It's a great city, but it's not a lifestyle city, right?
You can have
it's
really
like
nice hiking gear. Really,
exactly,
really nice.
Exactly. It's very,
You
maybe.
seem to love New York, Haseeb. Why don't you live in New York?
I do like New York. The problem is, so I work a lot with Asia. I manage a lot of our Asia team, and you cannot do Asia from New York. Like the East Coast time zone is just super brutal.
It's
so
brutal.
I spend most of my time on the West Coast. Exactly. But I spend a lot of time here because we have a big team here. We have an office here in New York. And so it's important that I be out here because it is so much of the epicenter of crypto in America. But I think these things are super path dependent. And, you're also right that like the finance element became more of a thing, especially in 22. But I think it's mostly these other things, honestly. I think it's mostly the cultural factors that drove New York to becoming that epicenter for crypto.
I don't know if you all have noticed this recently, but Avalanche has been on a roll. From FIFA launching their own Layer 1 on Avalanche, to VanEck unveiling the purpose-built fund to back ecosystem projects, the world is watching and building on Avalanche. Web3 gaming? Avalanche-based titles like MapleStory and Off the Grid have it covered. Finance? Avalanche has got that down pat too. Entertainment? Built for that as well. On top of that, starting in 2026, Sports Illustrated Stadium will be the first major sports venue to fully adopt blockchain ticketing powered by Avalanche. Backed by a strong network of builders and dedicated community, the momentum is accelerating on Avalanche for games, music, sports, finance, and more. Want to see how Avalanche is driving adoption? Go to avax.network and check it out.
I'm really curious. So how do you think we got from that moment? So the Bored Ape Rolling Stone cover, right? Like the NFTs, like we had that moment. Well, how did we get from there to stables? Like RWAs are the way. Like how did that happen?
Yeah. I mean, the answer is BlackRock. BlackRock was the bridge that got us out of the dark ages. So, crypto was basically persona non grata after the collapse of FTX. Like, I went from being super cool, invited to all the parties, celebrities wanted to talk to me. Like all of a sudden I'm like the man to never mind. Sorry, we haven't heard of you. People are not answering your DMs. And, that really continued until BlackRock came into the space. So that was, it was summer of 23. It was not that long after FTX collapsed that BlackRock announced that they were going to be launching ETFs. And people didn't believe it. Right? They were like, oh, there's no way. The SEC has been so combative. And obviously Grayscale was the one that paved the way with their lawsuit against the SEC that actually made it possible for, Grayscale had to walk so that BlackRock could run. And now, with 24, with BlackRock coming into the space, PayPal launching a stablecoin, Stripe getting into the game, the writing was just on the wall that this is going to happen. And then with Trump winning the election, that was the cherry on top that like, okay, it's over. any extent that there was this, this scarlet letter on the crypto industry, Trump getting elected lifted that letter and basically said, look, crypto's okay. So that, I think is kind of the way that we charted a path out. For the most part, there has been this retconning, in the public imagination, or even like the public reckoning with crypto about, okay, so I get it. Stablecoins are big. Crypto's big. Bitcoin's big. I get that. It's institutional now. What happened to the apes? What about the metaverse stuff? What happened to play to earn, Axie Infinity and all that? Didn't you guys tell me this is going to be the future? And I think one of the discredits to our industry is that we don't really talk about it very much, is that this is the thing that we told most people we were about. This is the way that most human beings were introduced to crypto, was these concepts, which are obviously much more reified and easy to understand than, okay, what exactly is a smart contract? So, I think this is something that still the industry is playing from behind on, is if we want the rights to enter into the popular imagination and into the culture, you do kind of need to explain, okay, why were we talking so much about, the PFPs and all this other stuff? So that's something that we try to do, and it's part of I think the narrative work that as a VC is incumbent on me, and that's what in our podcast we try to be as brutal and as honest as we can about, there was a lot of bullshit that got invested into and got promulgated over the course of 21 and 22, and it's important to say that clearly, and it's only once you say that clearly that you can then clearly talk about, okay, well, what is actually happening? And now this part is not a story. This is not oh, hey, wouldn't it be cool if. This is oh no, this is already happening. This is actually happening everywhere. It's absolutely enormous, and it's only going to continue to grow. And so reorienting people toward that image can only happen once you just acknowledge where the camera was and then tilt it in the right direction.
Yeah. I mean, we have obviously BlackRock, which is a well-respected behemoth entering the space, as you mentioned, years ago. And now we also have the president of the United States also in crypto, and when you were talking, I was thinking about the word Trumpification is what was coming into my head. Like, the Trumpification of crypto has really happened in the past, 10 months or so. And the question I want to ask you is, do you think this is for better or for worse? Because I think there are certain aspects that have made it for worse, where it's just kind of seen as a cash grab. And some people have argued with me on this, and I mean, they could have their own opinions, and then other people see it as a positive because it's making, crypto more mainstream. We have the administration taking it more seriously, yada, yada. What's your take on it?
It's obviously a mixed bag. So yes, the perception of grift from the Trump family is not good. And I think everybody in their right mind understands that it's a very bad look for the president to launch a meme coin and for that meme coin to, to whipsaw and then collapse, whatever it did, 85% or whatever. That's obviously a bad look. And it's something that rightfully many, many people are now, seeing crypto as more political. And political, not in the sense of oh, well, crypto's always been political, but political in the sense of partisan. That's really bad. And I think we are going to that cost is ultimately going to come due, likely just in the midterms, but potentially, going into whatever administration succeeds this one. So I think that's bad. That being said, obviously the extent to which the Trump administration has legitimated crypto, beyond just, okay, Trump is not going after people. It's more that, obviously the strategic Bitcoin reserve, the digital asset stockpile, all of the ways in which now he's allowed legislation to actually pass in this country about crypto and also making a place for stablecoins to be regulated and brought under the financial ambit of the Fed. All of those things are great. And they're definitely accelerants for how this technology is going to get adopted in finance. So I think it's mixed. And to be clear, every administration is mixed. So you're never going to get a singular answer of, okay, this thing is an unalloyed good. It was not what I was expecting going into this administration. In December, I was like, oh, this is going to be amazing. Wow. I can't believe that this is going to be such an awesome 4 years. And, by January 15th, I was very quickly disabused of that when we saw a Trump token launch. And then as, my co-host Tarun Chitra tries to put it, when the second tower hit of Melania coin, that was when I was like, oh shit, okay, we're in for a complicated 4 years, to say the least. But here we are.
what about beyond the 4 years? I think everyone feels pretty good about this 4-year marker, but how do you see this actually being sustainable beyond this point? Obviously, we could put laws in place, et cetera, but you brought up the point of partisanship versus bipartisan. And so how do we bring the ship back towards a bipartisan era so that, let's say after these 4 years, let's say a Democrat gets elected as president, they don't just come in and like rip everything off the walls?
Yeah. Well, so the first thing is get some fucking laws passed. So laws are very hard to overturn, as we have learned from everything that we've learned from just being crypto people, is that you can, like, a 1930s law about securities, like, you just, nobody can make anything change. So once we have a law in place, it's kind of game over. It's so hard to change any of these laws because it's very hard to get bipartisan agreement. And I think, again, rules can be overturned. You know, the next person can come in, you know, just the same way the Trump administration, like the EPA said, oh, remember all that stuff we said before? Never mind. So you can do that, but it is a higher burden than just when it's all vibes, you know, and like basically under Biden, it was more or less all vibes, right? Like the SEC never made any rules saying that everything in crypto is security, or you can't do X or you can't do Y. And that's actually to our benefit because it means it's a blank canvas into which you can now write some rules that require more of a process to overturn. And also there's just like a strong, there's a strong presumption of continuity. So once people are relying on a thing, it's just hard to rip it out. People are going to complain. And it's like and it's now not just, you know, the crypto bad boys who are going to complain, right? Now it's Coinbase and Robinhood and BlackRock and Fidelity and PayPal and Stripe. And like all these people will complain if you rip out the rules. And so that, again, is a big part of how we hold on to some kind of continuity, even if we see a turnover in administration, is just that the more that we start to build this apparatus and get people to rely on it, the more the status quo is just going to get baked in. So I'm optimistic on that front.
Bitcoin might sound complicated, but the Gemini credit card makes it simple. Use it like any credit card. Buy lunch, gas, or your weekly groceries, and you'll earn up to 4% back instantly in Bitcoin or one of over 50 other cryptos straight to your account. No annual fee, and right now you can grab a $200 Bitcoin intro bonus. It's the easiest way to start building your Bitcoin stash. Go to gemini.com/CIA to learn more. Terms apply.
Yeah, I'm curious how you guys think about that from an investor perspective, because obviously, so I'm based in DC. DC back in those dark ages of 22, 23, it was a very lonely place to be if you were in crypto. You know, it was basically Coinbase coming through, you know, doing their thing, and very, very sort of few and far between boots on the ground here. Obviously, we're in a different time. Andreessen has been super involved in policy, as you know. Other funds have been more active on the Hill or working with Congress. Does Dragonfly have perspectives on policy, or you guys, like, how does that affect you as investors? Do you see yourselves getting involved in that conversation, or just leave it to the other folks? Like, how do you guys approach that?
So we try to be helpful where we can. The reality is that I think the work that Paradigm and A16Z have been doing has been really powerful for the industry. And, we try to make sure that our efforts are not duplicative, because having, you know, 3 people instead of 4 people saying the exact same thing is probably not a big impact. Part of what makes us unique is the fact that we're very global, right? We have a big presence in Asia. And so we try to be, you know, a lot of our thinking is that, okay, at the margin, we can have a lot more impact, focusing on areas where other people are not focusing. So long story short, we try to be helpful and we try to make friends in DC. But it's not our structural advantage the way it is for A16Z and Paradigm, that have really strong policy teams on the ground and just they have a ground game that we don't necessarily have. We've done a lot of stuff in the US. You know, we've done comment letters. We've, you know, chatted with a lot of folks in the administration. We're active in, the Blockchain Association, which is, you know, this big, lobbying group that represents the industry. And of course we have our own mouthpiece just as public figures, I learned last year that actually Hester Peirce listens to our podcast. And so that has made me a lot more anxious when I do shows talking about all the bullshit that goes on in our industry. I'm like, oh, do I want Hester to hear this? Maybe we should soften this a little bit. But
she was our first guest, Haseeb. on Crypto
Is
in
that
America.
right? Is that
Yeah.
right? No, she's amazing. She's amazing.
Great.
I'm a huge Pastor fan. But
We'll hear that too.
so we know actually that a lot of regulators actually listen to our show because they write in sometimes. I hope that not too many of their enforcement actions have sprung from stuff that we talked about on the show, but I'm sure probably at least one or two have.
There we go. You talked about Asia throughout this episode, and we had Yatsu from Animoca on as well. And obviously, he has a huge presence out there, as does like their venture arm. It's one of the biggest investors in the space too. Obviously, this is crypto in America. We talk about the American market, but it's also important to discuss other regional differences, countries that you're focused on. How do you think about the global regulatory developments from, Pakistan's new crypto council to EU initiatives, influencing how you allocate capital? And then I'm going to guess your answer is Asia, but I was going to ask, where do you think is the most attractive place for founders to build, if not New York City? Because you gave the New York shill before.
Yeah. I mean, if not, so if I had to rank cities globally for crypto, I would say New York number 1, probably Singapore number 2, and Dubai number 3. And maybe SF is number 4, and then I don't know, you could imagine London or someplace like that comes after that. But it's very clear America right now is number 1, and I think Trump has galvanized that. But it was also true before Trump that New York was the number 1 city in the world for crypto, and I think that's you guys are very well aware of that. I'd say for founders, if you want to build, the most important thing is just where, I think crypto is one of the industries where it matters the least where you are building, relative to almost any other industry I've ever seen. A lot of these things, people don't even know where the founders are, right? So Hyperliquid, where's the Hyperliquid team? Most people don't know. If you ask people, where's the Jupiter team? Most people don't know. And to some extent, it doesn't really matter. Like, where's Vitalik right now? Who cares? No one cares where he lives, right? He's just kind of globetrotting around the world, bouncing around, and he's been doing that for the last 10 years. So, I think crypto is unique in that respect. Now, that being said, if you're trying to build a stable coin or you're, trying to get regulated in the US, then obviously, okay, you probably have to go be in New York. But the main thing that I look for in a founder is not really where they are. The thing that I care for is what are they building, and is there a reason why you should be somewhere else? And are you not already there? Right? If you're building crypto AI, then probably you should be in SF. Like that's where the talent is, where the energy is, where the action is. And almost all the big crypto AI projects are in SF. Now it's not a big industry, but to the extent that there's action in SF, that's a lot of it. If you're building in finance, you should probably be in New York. And so what I look for in a founder is not so much like, okay, well, you should be in New York, otherwise I'm not going to invest. It's that you should be where you're supposed to be. And if I'm the one telling you where you're supposed to be, like, what are you even doing? Like, you should already be there, to me, that's a much bigger red flag.
So what about in the Asian market are you seeing as like the most sought after category for founders out there that makes sense for them to be there?
I'd say, well, so there's a lot in Asia that's really about, we talk about stablecoins a lot. A lot of the go-to-market and distribution for stablecoins is in Asia, because that's where people are actually using stablecoins.
Unbanked.
So exactly. And it's not even unbanked. It's just like, differently banked, let's say.
Yeah.
So there are a lot of people in Asia who are banked, but they can't get access to dollars because of just, capital controls, or there's just, all these restrictions on, if you're an individual, what you can get access to. And that, very obviously, if you want to service that business, you're not gonna be able to do that from New York. You're just gonna you're just gonna be able to do it better if you're there on the ground and you have a presence there and you understand that market. So, we invested in this company called Codex that is a layer 2 that basically has a full stack stablecoin suite that allows them to service stablecoin customers. And they're based in Singapore. And why are they based in Singapore? The answer very obviously is that, they're working very closely with Circle, getting a lot of flow from Circle of people in Southeast Asia that are wanting to facilitate stablecoin payments. And that's, it's e-commerce companies, it's commodities companies, it's trading firms, it's, all these folks who really have a lot of demand for, import export type stuff. They're doing international payments. They want stablecoins. If you're in New York, you're not gonna be able to go fly to this person and sit down for coffee with them. So this just kind of, brick and mortar business decisions about where are my customers and how am I going to build for them. That demands you to have some on the ground presence in the places where you're going to build. So we're investors in an African remittances company called AfriX. They're based in Nigeria. Nigeria is their biggest market. Of course they have to be in Nigeria. You cannot build this business from, SF. It just doesn't work.
I'm really curious about your take on, we talked about the relative ineffectiveness of states trying to attract founders through regulatory sort of arbitrage or regimes. It's been really interesting to see what's happening internationally. We have a big team in Singapore as well. They recently came out and did some kind of reclassification on whether or not you needed to register. And then we saw this really interesting announcement and then rebuke of this like special UAE, kind of visa, golden visa program. Do you find that founders pay attention to that? I mean, I think I kind of know your answer on where they need to be, but like, how do you think about advising founders on paying attention to things like that, or trying to arbitrage a location like that? Like, there's like Prospera, in Honduras, like all these weird jurisdictions people are trying to build stuff in. How do you guys think about that?
Look, so I'll reiterate the previous point that I don't really care what you're building as long as it's okay for what you're building. I think from founders' perspectives, I don't think these, so there's always going to be blips because it's crypto. Like even if you're in New York, you're like, well, just a year ago, like literally I was getting chased out of the city and people were trying to shut me down. So clearly founders are they have a high tolerance for pain. So, we have a lot of portfolio companies in Singapore. We have a big presence there. And when the Singaporean government, when MAS gave out this notice that basically said, hey, if you're not registered, get the hell out of the country, people were very confused about what that meant. And people thought it applied to them. If you're like, building a DeFi protocol. And turns out the MAS kind of realized that they messed up a little bit in comms and they had to go back and say, no. This is only for like exchanges and, financial services companies that need to get a license. This is not for DeFi protocols or whatever. And so there was a little bit of a snafu there with the Telegram thing that you're mentioning with UAE. I think that was Telegram's fault. That was not the UAE's fault. So I don't blame that on UAE. I think Telegram, they had found some like visa processing company that was like, hey, we'll get you a visa. We guarantee that we'll get you a visa if you give us 100K in ton or whatever it was.
Yeah, stake 100K ton. Yeah.
Yeah, stake 100K in ton and we'll definitely get you a visa. And I think that they were just out of their minds to think that they could just go parrot that as though it was a guarantee that the government had given them when it's some visa processing company. So that was kind of, amateur hour for them. And I saw actually, I think it was the next day that there was a job opening for chief marketing officer at Telegram. And so I was like, okay, yeah, good call. Probably you should replace whoever was in charge of that. But I think for the most part, founders are forgiving of these kinds of snafus. Like the real thing is this a place where I can build? Can I find talent? Can I find capital? Can I find energy? If those three things are there, founders can survive, but they expect some volatility. Nobody comes in the space expecting a cakewalk.
Haseeb, you mentioned stablecoin growth is exploding in Asia. That's surprising to me. I didn't realize it was quite so big over there compared to places like Africa and other places where people are unbanked, not just banked differently. But I'm curious, with the Genius Act perhaps hopefully set to pass this month, do you think that's going to kick coin? Do you think that's going to kickstart stablecoin growth? I'm going to keep that in there. That's going to kick stablecoin growth in the US. Or do you think we're still going to be lagging behind places like Asia, the Middle East, places like that? Yeah.
So look, the reality of stablecoin payments is that, there is a lot of stablecoin adoption in places that are, basically borderline failing currencies, right? Or borderline failed states. So if you go to, Iran, you go to Venezuela, you go to places like this, or even like Turkey, that is, yes, you will see on the ground adoption of stablecoin payments with merchants accepting, Tether, Binance Pay, whatever. Although this is happening, this obviously cannot be where the lion's share of stablecoin activity is happening. Why not? Because the answer is just that GDP of these places are very low. So there's just like, you cannot command this quantities of capital explained by this activity, right? One of the things that we know, I've been telling this story for a long time, way too long. The story that stablecoins are really good for international payments, right? And that of course, international payments increasingly are going to be denominated in stablecoins. I've been telling that story for like a fucking decade now. And it's only recently that it actually started happening. Okay. Now the first green shoots of this, when this first began, was actually the cross-border payments activity between Russia and China after the Russia sanctions. that was the first place that we started seeing at scale Tether being used for international trade between Russia and China. And it makes sense, right? Because they're, one leg of this, normally they'd be transacting in dollars, but once one side of them can't transact in dollars anymore, they don't want to transact in RMB, they don't want to transact in rubles, so they pick the third currency, which is dollars. This has only expanded around the world. But increasingly, like the scale of this capital that's flowing around has to be not people buying coffee or buying groceries, right? Because again, the velocity of that money is very high. It can't explain the stablecoin supply expanding that much, right? What really does explain it is capital flight, especially in places that have lots of GDP to go around. And those places predominantly, it's Asia, Japan, Korea, China, places that have very high capital controls, India. These are places where a lot of people are starting to use stablecoins, and in these international payments contexts where you have huge payments that are happening in import-export businesses that want to use dollars, want to settle faster, low margin businesses that really need to squeeze out every single day of settlement, every single day faster that they can get to settlement means that, okay, great. I can send out the next shipment. I can, sort of keep running my business. So that's why, yes, it is very true that if you want to go somewhere and see stablecoins, you're not going to see it with your eyes in a lot of these places, except for places like LATAM and in Africa where people are actually, using things as point of sale systems. And so I completely forgot the second part of your question. What was the second part of your question?
Just, do you think we'll see the same sort of growth here in the US?
Will we see it in the US? Yes, yes. Yes and no. Mostly no. Mostly my answer is no. I don't think we're going to see stablecoin adoption in the US. Why not? The answer is that it's already really easy to use a dollar in the US. We have a lot of alternatives to wire transfers. Wire transfers, we do have that. They're not great. They're not super pleasant, but you've got, PayPal, you've got, Venmo, you've got Zelle, you've got, the menagerie of different ways in which you can pay people dollars in the US. And for the most part, they're not amazing, but they're good enough, right? And the one thing you learn in the history of technology is that good enough always wins. You cannot replace good enough with better. It just never works. It has to be way better, or it has to be not good enough. It has to be fucking terrible. And okay, that you can actually replace. So I think there is one plausible path in my mind of how stablecoins could end up getting entrenched in the US. And I think that's through the tech giants. So, today, if you think about tap to pay really took off during COVID. And why did tap to pay end up piggybacking on Visa and MasterCard on the credit card rails, as opposed to using their own payment method, right? If there's anybody who had the distribution to force their own new payments method, it could have been the big tech companies, but they didn't, right? And why didn't they? One answer to that is that they didn't want to enrage the antitrust regulators. Because of course, at that time it was COVID, it was under the Biden administration, Lena Khan. And if they were to go and create their own payments mechanism, there would just be, fucking riots in the street. It would be absolute pandemonium if they were to potentially incense their regulators to that degree. And so they end up cutting deals. Both Google Pay and Apple Pay have deals with the credit card issuers that they get a cut of the interchange fees. And that's, good enough. And look, we'd have to pay something in order to spin up our own network, and it wouldn't get full distribution, and it would be a pain in the ass. So whatever. It's really hard to create a payments mechanism, right? It's super regulated. It's very hard to do. Stablecoins just got regulated, and they're really cheap. They're really easy to use. No one owns them. Nobody can go in the middle and take a fee and say, oh, if you want to use our thing, you have to pay us blah, blah, blah. Right. And so one can imagine a world where now that there was also a very big antitrust case against Visa. So one of the things that you notice when you go and use your Visa credit card is that, if you pay your taxes with a credit card, the government will tell you, fuck you. We're not giving you the full thing, right? We're going to charge you an extra 2% surcharge or whatever it is. Basically, they're passing the interchange fee onto you. They're saying you have to pay more. But when you go buy, a TV with a credit card, they don't do that. Now, why don't they do that? Why don't the merchants push you toward a payment mechanism where they keep more of the money? Why does that never happen? Except with the government. The answer is that the Visa merchant agreement doesn't allow them to. They're enjoined from doing that. Otherwise they get kicked off Visa, right? And so when you go to like a corner store and they say, oh, if you use a credit card, we're going to pay this. They're actually breaking the rules. And if you go report them to Visa, they would get in trouble. That's why it's like bodegas that do this and not, Best Buy. So this only recently got challenged by I believe by the DOJ as an antitrust thing, because obviously this is anti-competitive, and it's so fucking obviously anti-competitive that they cannot push you toward a more competitive alternative that gives them a lower price. And so this only recently happened that you can now actually steer customers toward lower cost payment mechanisms and give them a discount or rebate, right? Okay. Now let's game it out. Let's say your Apple Pay, your Google Pay, right? And you're like, hey, I want to keep more of this interchange because this is a huge fucking business if I can keep it, because tap to pay is taking off everywhere, right? I don't even go out with a wallet anymore. I just have my mobile phone because I can just tap to pay everywhere. In this universe, you would be out of your mind if you were not to say, if you use our mechanism of stablecoins, and we use stablecoins to instantaneously pay instead of using Visa or MasterCard, and you just load up your, Apple Wallet or your Google Wallet, and you don't even need to know it's stablecoins. Who cares that it's stablecoins? If you use our mechanism instead, we will rebate you money. And instead of, the 2% fee, we'll give you 50 bips back in cash back, and we'll give 50 bips back to the merchant or whatever. Something like this, right? You could in one fell swoop totally replace the way in which retail payments happen in the US via tap to pay. I think that is the most plausible path because stablecoin rails are neutral, are open source, completely accessible to anyone, right? That virtue means that anybody can co-opt it. Instead of, if you wanted to replace Visa or MasterCard, what's your replacement? How are you actually going to route around them? The fact that stablecoin rails are open allows anybody to use them the same way anybody can use open source software.
Yeah, it's a really interesting point. How much of that do you think is regulatory arbitrage versus the tech? Because it's we spend a lot of time on the Hill. We have a lot of those conversations. I think going to a senator and saying, what's a use case here? Well, like China and Russia can send dollars to each other really easily. That's not a very attractive use case to a legislator. Do you think the rails that you're talking about and the circumvention of that system is like a feature or a bug?
I think that's clearly a feature. I mean, to me, that is basically breaking the monopoly of Visa and MasterCard. Or duopoly, I should say. I think this duopoly, we're fine with it because, who's incurring the cost of this duopoly? The answer is obviously not consumers, right? Consumers are not incurring this cost. It's merchants who are incurring the cost. Well, no, that's not true. Why is that not true? Because the merchants will price things differently in order to pass the cost along to you. So the way this gets materialized is that everybody pays a higher price for everything because the interchange fees of everything that goes through the economy is getting captured by Visa and MasterCard. That's why they're such profitable businesses. And everyone pays a higher price. So this to me is just such an obvious thing that, in the year of our Lord, 2025, that there should be some competition for how you move money around. And it should not be that everybody incurs this cost of the credit card issuers.
But don't you kind of see that happening through Stripe's recent acquisition with Privy and kind of their foray into the stablecoin market? Because I definitely hear you and I agree with you. When I go out, sometimes they're it's a cash discount, or like you said, there's a little 4% increase for card. And it's I didn't actually know they weren't allowed to do that. I just thought that's the price of, using your credit card.
Well, only recently they're actually allowed to steer because of this antitrust case.
Got it. But what about the Stripes of the world and those who are actually getting into the crypto side of things through M&A activity and other aspects?
So I think they are seeing the same thing that we're seeing, which is this growth curve in the amount of enterprise adoption of stablecoins around the world, right? Stripe obviously has incredible eyes and ears and data that they're seeing of, more and more of these companies are starting to do this. And Stripe wants to be there early. They want to be at the elbow of that growth curve in order to capture what's almost certainly going to be a very, very large market. And I think same thing with PayPal, right? And most of these other payment companies are just behind the ball. They're not. That's why Stripe is Stripe, is because they're really, really good at being the first to jump on a new technology and to lock themselves in as having the best solution in that technology. So I think their acquisition of Bridge and of Privy is a great idea. And they also understand that the initial set of customers are going to be different than the late majority that will eventually come onto their rails, right? And so what it looks like, at the end of the day, any company, your first job is to get customers and start learning from them. Start learning what should the product be? How should the product evolve? What are the things that they need? If you just say, okay, well, these crazy startup crypto people, that's not what the late majority is going to look like. These guys are weirdos and I don't want to build for them because I'm going to build the wrong product. Then you're just going to kind of sit around imagining in your head what someday people will want. And that one thing you learn from being a VC is that never works. It just never, ever, ever works. You cannot build for customers who don't yet exist. You have to build for the people who are in front of you because you need a signal of what is good, what is bad, what pisses people off, what makes people happy, what increases retention. You need that signal to backpropagate against. That's what startups do. Startups are learning machines. But if you have nothing to learn from, then you're just taking a shot in the dark. You're just, your magic leap. You're just saying, here's what I think maybe someday in the future people are going to want. Never works. So that's why Stripe, I think, is very wise to say, who is using stablecoins today? Let's build a product for them. And let's keep iterating, keep improving it, keep figuring out as more and more robust customers find their way on chain. We're going to keep learning from them and evolving the product. That's absolutely the right way to do it rather than waiting and playing from behind later.
Jacqueline mentioned the acquisition of Stripe and Privy, right? Stripe acquired Privy. Obviously, there's other consolidation going on in the space. We're seeing a lot of IPOs. Companies coming in, buying other companies. How do you think this is kind of shaking up the landscape? And how are you advising your portfolio companies about investing, especially kind of with this consolidation going on? Do you see that changing the landscape at all?
Yeah, I mean, with the Circle IPO obviously being a blockbuster, there's now 2 huge acquirers in the space that have a lot of stock to play with, right? So Coinbase at 90 billion, Circle at whatever it is now. Obviously, it's been trading pretty crazy. You've got a lot of other, you've got Ripple, you've got all these other folks who are very acquisitive. So it's a good market for M&A. And obviously, Lena Khan, again, her being out has also changed the M&A environment, where basically we saw almost nothing happening for a good 3-4 years. And now everything is happening, right? The pace of M&A that I'm seeing and all of our companies getting hit up by people interested in M&A has just been complete night and day from where it was last year. So that's been great to see. Equity is cool now. Tokens are not cool. So that's new. That's kind of a temporary shift that we're seeing, is that the valuations on the equity side are somehow higher than they are on the token side. I think that may be short-lived. I'm not indexing on that too much, but it is something that we're seeing at the moment, is that there's almost more demand for a lot of these equity businesses than there are for token businesses, or not businesses, token protocols, I should say. So what are we telling our portfolio companies? Honestly, not much. If they're actually in M&A conversations, we're helping them to navigate this stuff. And we're also introducing them to potential acquirers, because we know all the people who are out in market, because they're all, back channeling on to us, asking us, hey, what do you think of this team? What do you think of that team? But for the most part, like, my advice to entrepreneurs is very simple, which is just keep building your shit. Don't get distracted. Don't say, oh, I should go pivot into blah, blah, blah. It's like, no, look, if you need to pivot, but like, just keep building your product and don't worry too much about the machinations of the market. Crypto is always noisy. Markets are always noisy. The hot fireball of money is always in some place that's not where you are. It's okay. You don't need to go and turn the wheel completely, go off road, break through the other lane, just to find yourself wherever the action is. It's fine. Just build your product. And if you're building the right thing, the market will eventually recognize it.
Last small question. What % of your portcos are actually looking into getting acquired or in those conversations?
A very small percentage, because, most people are just, they're grinding, they're building their business. Yeah. So I'd say at any given time, there's probably 4, 5, 6 companies that are actively in M&A conversations. And a lot of those are pretty fast, just because, everyone's moving pretty quick on the M&A side. But yeah, so we have our hands busy. We have our hands full. We're busy talking to a lot of these founders who are navigating these M&A conversations. And as soon as one ends, a new one begins. But in absolute percentages, it's certainly not most of our companies are talking through M&A.
Okay, fair enough. Last thing, Haseeb, we always ask our guests this. Aside from everything we've discussed, what is one other thing that you're watching in DC or America that you think we should pay attention to?
That I'm watching in DC or America?
We usually say DC, but I
in DC, out. I don't watch DC. Clearly, you could tell. Eleanor could tell I had no idea what was going on.
Not true.
Yeah. Okay. What am I watching? I'm watching this New America Party thing. I think that will be very interesting if we see Musk actually maintain interest in creating a third party, especially a party that's very pro crypto. It may just mean, I mean, I think like the base case here is that the Republican Party just basically becomes unviable if he can actually steal like, you know, a good 6-7% of the Republicans into this like weird third party thing that he's creating.
I think it's actually
I don't know how viable it is. I mean, I think it's plausible if he is sufficiently motivated. I think his motivation is the real question here that is casting it out. I think if he wants to do it, he can.
He seemed pretty motivated about a bajillion other things. So
yeah, but he's also committed to a bajillion things. So of the bajillion things that he's committed to, a few things he's actually been motivated enough to do.
All right. We'll keep an eye on that. Thank you so much for coming on today. It was a pleasure.
Thanks for having me. It was a lot of fun.
Thanks, Haseeb.